Good afternoon, everyone. BC Richfield here, coming to you live from London. Apologies for the delay. We're about 5 minutes later than planned, just due to a couple of technical issues, but hopefully everybody can hear me okay. I believe we've already got Craig in the house. I hope you're still around, buddy. No work calls to deal with today. If you can just give me a moment, I'm just making sure we can get these charts loaded up okay and the technical issues are behind us. If you guys can hear this all right, can somebody just let me know in the chat, please? And let's get us some charts loaded up. All good, Craig. Thank you, buddy. Thanks. Sorry for the slightly gruff, breaky voice today, guys. It is a little bit of a hangover, not in an alcoholic sense, but just in a work sense from Berlin, which was really, really good fun, actually. I'll catch you guys all up on that. Telvin Fu, Wax Shah, hello, my friends. How are we? How are we doing? Right, let's try and get you guys some charts. And let's see where we are. Here we go. Perfect, guys. So just let me know when you can see that okay. Just looking at our current range chart on Ethereum. Clear a little bit of this up. Awesome. Right, if you guys have got that, then I don't see any reason we don't need to start on ETH. Perfect. In fact, let me just dive straight in and just give you my trade plan for the day, or not for the day. It's a little bit of a risky one, I've got to admit. Shared this with the team today. So taking a long position in here in this breaker, we made this clean break above here. Retaining market structure on the lower time frames, right? We've got this low time frame trend line here that was suppressing price. Price ultimately ran above this range level, right? Came back beneath. Now, the question I'm asking myself is, okay, if this is showing weakness here, then why come back above again here? Now, the risk today is that we've got very, very low volume and liquidity. We're coming into the PPI numbers shortly, all right? So it is a high-risk trade, so we've reduced our position size by 50%, meaning that that's our exposure to the risk. Yeah, so what would normally be 1R for a risk, whatever that is to you, maybe it's $10, maybe it's 100, maybe it's 1,000. We're going in with half of that of our risk, meaning if we get stopped out here, we lose 0.5R. So let me give you a little bit of the thought process behind this. Yeah, you guys might find that handy. So we're playing this, or I'm playing this, sorry, off the back of an impulse range. Yeah, so an impulse range occurs when we get a drop like this, or like you would see with this one here. Then you get the expansion. Yeah, and what you're doing is you're looking to take the bottom of the drop to the expansion. So in this case, you guys will probably see this a bit clearer on a 30-minute chart. Okay, what we've got here, let me just turn these session breaks off so it makes it a bit clearer. So we had the drop, yeah? So the drop comes in, we set a clear bottom here, yeah? So that's the bottom of the range. Then we wait for the expansion to set a clear high, which it does here. We then draw our range from this low to this high, and then I engage with the range when it interacts with the midline here, yeah? Now, for some people, they want to see 3 touches on a range to make it valid. For me, I'm a lot more kind of interested in what the range is doing, how it's setting after that kind of impulse drop. We'll also take a look at Bitcoin, show you we're trading an inside bar range on Bitcoin at the moment. And if anybody does have any questions on there, always more than happy to kind of run through them. I know we've got a lot of kind of patrons to the channel now. That listen to me waffle on about this stuff all the time. So I don't want to keep kind of going over for them. But look, this is a very, very open space, right? Everybody here is here to learn or, here to add value. So don't feel at any point like you can't ask questions. All right, guys? So there we have it, the range. So my thinking is this. If we look at it on this level, maybe actually drop this to a 15-minute. In terms of trading this range, right, we can see what happens. So we set the range here. Yeah, price comes back down. Now, what we're looking for are these deviations, right? Price to try and make its way under a level. And when it comes back above that level, takes market structure on the lower time frames, we look to trade it first to the level above and then the level above that, right? Purely, simply level to level trading. Now, again, deviation here, price comes back in the range, breaks structure. We then look to trade it down, midline, ultimately to the range low, but we can see this one here got stopped around here. Carlo, hey bud. Good to have you on the show, my friend. So we can see here, deviation here, back in the range, deviation here, so on and so forth. All right. I think I completely stand by my premise on this trade. Right. Let me show you all, because it's important that we show our winners and our losers. Right. This is the trade setup here. Very low time frame scalp. Just drop you down to the M5. We can see here we've started really well. We got that nice impulse move higher, closing above this line, which was our trigger line. We then enter the trade. We got our trigger set up here, unfortunately, which obviously triggered back here. This was pushed a little bit across to the side in order to be indicative. But the trade setup triggered here. Yeah, that's where our entry was. And it looks at the moment like it's showing a lot of weakness. Like I say, in my opinion, would I change this trade setup? Absolutely not, because this is just bread and butter range trading for me. Works incredibly well down here, right, which we can see, same situation. Price came down into here, reclaimed the range. This is a 15-minute order block, yeah, which is signified by the OBM15. Price came down, broke structure to the upside, as we saw here on the retest, gives us the opportunity to go long, playing it higher. All right, we get up to the 50% mark here, take some profit, came back, stops were taken at break even. Now, there have been some particularly treacherous conditions to trade lately. Some people have been doing incredibly well in them. We've had some really, really good weeks. We've had some off weeks. As a company, the trading has been exceptionally high level. Excuse me for a moment. Because we've got a mixture of approaches, we've got day traders, scalp traders, systematic and algorithmic builders as well. So that's allowed us, I think, so far in June, we're looking at about 64% win rate, which is highly, highly profitable. And that's kind of around about that 62, 68% is what you're really aiming for. But you can be profitable above sort of 34% as well with the different trading systems because of the different risk to rewards and time frames. Now, for those of you that don't know, I do favor the shorter time frames. All right. So basically, as it stands, for me, this becomes more and more dangerous, this trade, as we're heading into the PPI announcement, right? I think we've got that in about 30 minutes. About 15 minutes from now, actually. So the big risk here with an announcement like that is you've got liquidity resting here, liquidity resting under here, and even lower down. Often what happens is price comes up, takes both, and then just kind of consolidates in the middle here. So the premise of this trade was the idea that as we broke out above this higher, we enter the trade in here looking for a quick run up to here, then looking back here where we've got the origin of the OB. Yeah, we take that along, look to take our profits quite early here, move the stops to entry. As it stands, we've just not had any volume or any kind of reactiveness here. So, you know, this could still reclaim and start to pump higher, but as it goes on, it looks more and more likely that it's going to get stopped out. But that's the nature of trading, right? You know, we lose roughly between sort of 40, 50% of the trades that we place. So for me, it's really, really important to share this with you guys, right? Because it's very easy for me to just hide this stuff off the charts, go live and say, yeah, you know, this is what we're looking at, etc. But it's just not me. I think the people I've been fortunate to learn from, the people I'm fortunate enough to work with over the years are very, very transparent. I think that's the sign of not necessarily a good trader, but certainly an honest one and one that's doing it for a living. So let's see how this plays out. Just popping back to the 15-minute chart again to give you a bit more confidence on this. The way that I'm looking at this was seeing this as a 15-minute breaker, right? We had this up candle here that purged lower, right? Now, ideally, you would want to see it kind of take out lower, but the idea that it's reclaimed this was an early stage theory that basically we've purged liquidity lower. Now we've come back above. The idea is we want to kind of see this held here. So we've broken above it here. And the idea for this, like we would look at with an order block or with a fair value gap, is in an ideal world, what you want to see is the equilibrium. Yeah, so just draw that in there. Move that down to our PD range. Now, can you see this line across the middle here? This is really what we want to see hold. Yeah. Now, forget these ones here before because we hadn't had the move out of it at this point. Now we've come back in. We're happy to see wicks down there. Yeah, see how we see these kind of dipping in. We don't really want to see any closes. I think any real closes below here, and I think the chances are that we kind of purge a little bit lower. So let's see how that one plays out. Let's just zoom out for a minute. I really do apologise because post Berlin, I'm sure I've still got a lot of stuff on the chart. No, I have cleaned everything up. So for those of you that are looking at this on a high time frame, right, we apply the same principles to the high time frame as we do the low time frame. Yeah. So for example, if we're looking to set an impulse range from here, so look, we have the large drop here. All right, we set a clean bottom, then we come back up to here, set this top. Now, how do we know the difference between the top and the bottom, right? So for me, I'm looking for market structure. So as we come into here, right, break above these highs, that's how we get our confirmation. Break below this low, certainly this low here, is where we get our confirmation on the way down. So keep it nice and simple, all right? So if I take my range from here, I lock it onto this, we trade this across here. That becomes our range. Now let me make that a little bit clearer for you guys. If at any point, guys, this is a little bit difficult to see on the screens, please do just let me know. I can make these lines a bit thicker. I'll do that anyway. All right. So look, in terms of this would be our high time frame range. This is a really, really easy way, or not an easy way, but a good way to kind of get into the methodology of setting your ranges. Now, for me, we broke market structure here, but we also engaged with the midline. So remember that in terms of our touch point, this sets our range, the break of market structure here, which occurs down here. Yeah. That then gives us the indication that that's the top of our range. And then the interaction with the mid range here is what then allows us to accept that as a confirmed range. Once again, we're looking for price for deviations to get back below the range, and then we're looking to trade to our levels. So the next thing that I want to do, especially on the higher time frames, right, is I want us to set our mid ranges, right? So let's just get rid of the numbers on those. And then we'll tuck that back in here so that's nice and neat. Perfect. Right. Now, when we do that, we can really see the interaction that price has. Okay. So when we zoom in, we can look for our entry and exit patterns and techniques. But ultimately, once the range is set here, we can see as we move along, even looking at here as we are on the daily, we get the deviation, price closes below. We first target the midline. From the midline, we then target the low. Don't quite take it out there. Ultimately, we come up here, we close above, deviation, back below, held here once again at the midline. And what I'm looking for here is I'm looking for price to give me an indication that it's ready to move, right? So what do we mean by that? What I mean by that is when price comes into our level, and let's look at one of the kind of clearer deviations from earlier that we were just talking about. So when price breaks above a level, and this again, time is it's fractal, right? So if you're looking at this on a daily to a 4 hour, you could easily be looking at this on a 1 hour to a 5 minute, etc. But ultimately, this is the high that we set. Yeah, price then broke back down. So for me, I'm then either discounting that, or if I'm saying that price has set this high, come back down when it's got back above here, yeah, then my risk is here. All right, meaning that if I want to go long, my entry would be on a retest of this. My stop loss has to go back below this low. And ultimately, my target is here. Now, that's all well and good, right? There's nothing wrong with trading like that. However, you can quite often get this in terms of your risk to reward, right? So you're taking a really, really bigger position. Your risk to reward isn't amazing at 1.5R. However, if you test this over time and you have a reasonable win rate, anything over 50%, if you stay with conviction and your minimum take profit target is target 1 here, 1.51, you will have a profitable trading system, okay? Nemesis, hey buddy, good to see you. So let's just clear that up for a second and look at the other way that we can trade this. So Once price has got above and gone back below, right, we're then looking for price to give us indication that it's found strength again. Okay. So this is the high that's set when it comes back down. Ultimately, it doesn't surpass that high, doesn't give us our trigger. Price deviates again, gets back above it again, ultimately doesn't take out this high. Now, all we're doing is we're marking off these different highs. When price comes back down below, yeah, we then look to reset, which is this high. Okay. So when price does this, yeah, and you see this move here, takes out all of these stops, right? Now, what's happened? Price has come down, set this high, right? Price has now deviated, come back up, and set this high. All of a sudden, when we get this clean break above, I know it looks like we're getting in this trade a lot later, guys, but actually, this is kind of, let me draw this out a bit cleaner for you, actually. Okay? The price now comes back above this range. This is the high that it set. Set this one, deviated, took out the stops. This impulse move up here is what I'm interested in. It's what I would call a breaker line. Yeah. So now all of a sudden, yes, we're getting in the move later, but we've got a much higher conviction that price is now moving to target. So price has come in. Yeah. So we've had the move up. Price has consolidated in here. Yeah. So we can see the consolidation. Price has now made a clean move above, kind of a little bit power of three, not really, because you'd want to see a kind of more obvious deviation, but it would kind of count if you're saying that that's your consolidation, that's your deviation, then you're looking for your expansion, right? But what I'm looking for here is a break of this line. Now look at the energy at which price breaks through this level. See how it really pops through, right? Price ultimately comes back down, retests the breaker line here, allowing us to go long. So when we close above it here, we'd have our limit order on here. Now, with the limit order on here, our risk is below here, right? Always a few pips below. All of a sudden, see how we increase our risk to reward by almost 2x. Yeah. So sometimes it's really, really easy when you're reclaiming a level to just want to jump on board. But ultimately, what I want to see is a really solid base. Now, just to show that I'm not cherry picking, if we look at this here, yeah, and use this as the same line, notice how we didn't have any clean break and hold above this until we got to there, right? So that's the thing that we want to be aware of. Or not we want to be aware of, it's something certainly that I'm aware of when I'm taking these trades on a range basis. Now, obviously, we plug in a lot of different methodology to this as well as we go along. We can see at the moment with our current range, we're doing exactly the same thing, but on a lower time frame. So if we drop down to the 15-minute, okay, we can see here at the moment price holding the equilibrium as we talked about, but unfortunately, my concern now is with the PPI numbers coming out, you often get this whipsaw event, right? Price will come up, take out the high, yeah, take out the low of the liquidity as well, and then just kind of chops around. However, we have to trade these setups with conviction, right? And the only limiting factor to this one, which is why I reduced the position size, was the fact we were trading into PPI. Now, I think it's always important that we make that really, really clear, especially in a position such as myself, where I'm sharing this information with other people. I'm not suggesting anybody takes these trades, but I do like to post all of my setups live for the group. It gives me a bit of ownership. It allows me to share my kind of thoughts and analysis with everyone. And ultimately, the buck stops with me, right? So whether trades are taken within the group or not, I think it's nice to have that kind of ownership of them. I think people who were really big in my education when I was learning many years ago, people like SC, for example, is somebody that just has this brilliant ability, just shares everything, right, in terms of setups, because you have to have this confidence in your setups as you're going, all right? Now, the reason that I'm focusing a lot more heavily on market structure and range plays at the moment on the lower time frames is purely because of the noise, right? Now, when we look at this, and let's zoom out actually to a 30-minute chart, we can see how price is just trapped in this consolidation, right? Now, where's the high probability from here? It's very, very difficult to say, right? We deviated the highs here, we came back down, but we didn't quite take out the lows, right? Here, what happened was, again, price came down, set this double bottom. Now, when we started to break down, and ultimately we got our rejection from this high here, allowing us to short down into the lower levels, once again, we still haven't purged the range lows. So We've taken out the highs here. We've come back down, but found fairly consistent rejection at the lows, right? Look at these downside wicks, right? To me, that's showing that there's still buyers down here, right? So there's still an interest. However, we obviously have to be super, super aware of the time frame that we're trading on, right? So once we've got that methodology in place, we can then build that out, take our ranges and look for positions. So let's take a look at Bitcoin and show you this on a slightly higher time frame and a different type of range. Just wait for this to load up. It's getting a little bit hot here in London, which is quite nice actually with the sun being out. But whenever the heat comes out too much, the tech does like to take a little bit of a hit here in the office. So let's take a look at our daily chart, give you a little bit of context. So this is a range that we've been trading for a while, right? It's based off of a weekly inside bar pattern, right? Which is something that if you guys are interested in learning that, I've got it pinned at the top of my Twitter profile, all right? Exactly how you can identify them. But basically 2 candle pattern, mother bar, inside bar. At the close of the second candle, as long as the second candle doesn't go above the high or below the low of the first candle, it makes an inside bar, right? Now, this orange line here is almost the midline of the high of the mother bar to the low of the mother bar, but it's also a key pivot, a key support resistance level, all right? So that's why that's on the chart. Now, I'm going to drop this down onto the lower time frame so we can see the range in a little bit more detail, but just so that you know that that's the origin of it. When I'm looking at that, I'm looking for a high time frame candle or a high time frame inside bar setup, yeah, that's capping the market. And at the moment, the inside bar, as we can see here, by our same range trading principles, can we call that falling wedge? Ali, let's have a look, my friend. Yeah, absolutely. I mean, it depends really where you're kind of taking it from, but I would say if we pop back to the weekly, it's kind of like a falling wedge stroke bull flag, right? So if we pop it onto the daily, you'll get that even clearer, right? So what our friend Ali here is talking about, and let me just pop that on there so everyone can enjoy your comment here, Ali. So what you'll notice is quite often, and this is a poor example really, but when we had this expansion higher here, yeah, we had this wedge type pattern, right? And this isn't exactly ideal, but it kind of still is because you've got at least 2 touches here from the high to there to the high to there, the low, and the low, meaning ultimately the breakout of this pattern. We're then looking to extrapolate this distance here. Yeah, I'm not sure I can do this actually without, no, I think I'm going to affect the thing of it. And then that's going to be your average return here, which wasn't far off, right? However, I know you're talking about this more recent one here, which also I think is completely valid. Yeah, so if we just, I think we've got this highlighted as our inside bar weekly range. Let's just pop that off for a second. Also, let's get rid of that support resistance level, which is this one. Now, the key thing when we're looking at a falling wedge, right, or a rising wedge, is you need to be consistent in terms of where you're allowing yourself to take it from. You either have to make the allowance that you're taking it from the extremity of a wick, and then you respect the other wicks, or you can just respect the bodies, yeah, like this. Now, the key thing is here, it doesn't matter if you get this little deviation here, it's the beginning of this move that I like to see nice and clean because, you know, you don't want to see people saying like, okay, well, where's the origin of this wedge? Let me just kind of pick here and then I'll kind of draw it through here, through some of the bodies or whatever kind of suits my bias. No, what you want to do is you want to make sure that you've got a clean anchor point. It doesn't mean that you can't anchor it to the bodies, right? So if you wanted to anchor it to the bodies, then this would be the wedge here. The key for me is that then this doesn't violate the body's of the other candles, right? So you see how we've got it anchored to the body, but it doesn't pass through the body, right? For me, this would be a lot more questionable if it did something like this, right? It's a bad example, but basically, if you were going through the body of one of these candles straight away, then basically the problem is you're just retrofitting this. You can draw it anywhere. However, if you want to just respect the bodies, yeah, then you could draw it like that. But for me, I'm always thinking, okay, if you're putting it in like that, you can see that you've respected the bodies here. Anchor it to the body there. Make sure you're not violating that body. And what I mean by the body here is this second touch point here, right? So you can see you've got a nice clear anchor point on the body here, and it's going through. Alternatively, like I say, you can anchor it to the wicks. But I think either way, the key thing here is you can see where the compression is taking place in a very similar way that you would look for a range, right? So price comes up here, 1, 2, third touch point here. Clearly, you need the second touch point down here. So once you've got that, deviation, price gets underneath, we target the far side of here. Now, deviation here, we're expecting expansion to the upside, right? So henceforth, those kind of things go into our thought process in terms of when we're looking for these, and hopefully it breaks out. Mate, I'm with you 100%. I'm long on this at the moment in terms of the lower time frames, or well, certainly on ETH anyway. But that's a really, really good point, Ali. And the high probability in terms of patterns and pattern trading, Burb is absolutely exceptional as a CMT level 3, one of the only ones in Europe, certainly the only one in Poland, I believe. And there's a lot of talented traders and builders in Poland. But also Axel Kaibar, who's another CMT. The guy is unbelievable. Like literally unbelievable when it comes to pattern trading. His knowledge is second to none. So, yeah, good question here from Ali as well. So what we would do is you would look to take the bottom to the top of this move. And if we get our breakout here, for example, the idea is that distance from there to there is the average of what you would get. And what I like about that as well, it was kind of take us in the realm of being able to kind of swing fail this here. So I would say probably something more like 30, 31, 32, maybe, Ali. Yeah, I think you could get a breakout from there. Breakouts can be tricky to play, however, right? Because again, if we look at this, these principles apply in my perspective, certainly to ranges as well. We're looking at these deviations, right? So if we now drop this to a lower time frame, say a 4-hour, then what we want to do is we want to set ourselves a set of rules, right? Because if we were trying to play every breakout of this or breakdown of this, yeah, then we can see how much we could get ourselves in trouble here. But if we apply the previous principles that I was telling you about monitoring for the deviations, if we now look at this and we say to ourselves, okay, look, same principle here, right? This is the high from the deviation, right? This is the low from the deviation from the breakout, yeah? Again, this is the high from the deviation, low from the deviation, low from the deviation, all right? At no point on any of these, yeah, do we go above, reclaim it, yeah? So from here, we would want to see price come down, yeah? And then we get it to here, reaction here, a reclaim of this, retest of this level, and then we'd be looking for expansion higher. So we can see on none of these we got that, right? What we got was a very telling long tail wick and price coming back within the range. So ultimately, again, we look for our market structure breaks. Price fails here, yeah, breaks market structure here, and then we ultimately trade it to the low of the range, okay? Now, that's the same principle that I'm employing today with this. My expectation is that price has now deviated here, stepped back into the range. Yeah, on the lower time frame, we've changed structure. Price is moving higher. However, this has been kind of quite a key order block here. Yeah, we can see we had this, we retested it. That allowed for the expansion to the highs. Price sliced through this, deviated, but then sliced back through it, found support here. Yeah, ultimately, we've broken down and now we're finding resistance. So this for me is a really, really key pivot point. And I think that's going to be it. And I think actually that's it. We are out of our ETH trade, that's our stop loss that's been triggered. So let's take a look at that trade quickly and see what we could have done better, if anything, or if we just kind of got ourselves caught on the wrong side of that. Obviously, we've just had PPI come out. So like I said, the high probability now, unfortunately for us, is for volatility. We took a slightly higher, riskier trade this morning, which is fine because we managed that risk. In terms of the overall risk reward for the week, we've only lost 0.5R, so we're still nicely up for the week. But we can see here we started to just regain here 13.15. The minute we close out 13.30, look at that candle. Yeah. Now this candle could absolutely just be about to break down and try and take out the stops below from positions like me before recovering and going higher. But that is something that we would need to find out separately. So let me just pop on here and see what these numbers are, right? So let's just take a very quick look. Okay. So PPI is down. Forecast was 1.5. It's actually at 1.1. And then PPI monthly was forecast for minus 0.1, actually minus 0.3. Yeah, Ali. Yeah, I'm not sure. I think basically the forecast was a little bit higher than that. So I think those numbers have come out under. I think FOMC later is going to give us the real kind of input, right? It's whether the Fed are planning to hike the rates, to whether we're going to see a 0.5 basis point rise. Obviously, the information that came out yesterday, made it seem a little bit more likely that we could get some kind of pause. So that can obviously lead into a little bit of a bullish bias, but it's always important that we put all this together in terms of confluence. So let's just have a little bit of a look here. We can see how our stop loss has just been triggered down here as the market looks to purge a little bit lower. Ultimately, we've had to sacrifice market structure here on the reversal, so we're out for 0.5R. I am going to be looking at this trend line here, just to see if price does come down, because what we've got some nice confluence here between the intersection of this diagonal and then this level here, right? So if we get price holding around here, bearing in mind that we've got our range level here as well, hold and a reclaim of that, we could see a little bit of bullish continuation. Unfortunately, the high risk PPI trade didn't pay off today, but it is one of those things. We have to take it in our stride. And someone asked me the other day, they said, how do you not really get annoyed at losses? I think the whole thing for it is understanding and realizing that it's systemized, right? So you're playing the odds of this over a long period of time, right? So if you get to a point that you can't kind of trust in your system and your execution, then you find yourself in very, very dangerous ground, because if the trade setup is there and then you get the trigger, if you don't take that trigger, but then you choose to take sporadic triggers, it's very, very difficult to know how that system pays off over time. That's why systemized systems, like my good friend and wonderful systematic trader, Pedro or Pedma7, another analyst at The Nest, and he's available on Twitter as well. You should check him out. He builds these systems, and these systems are absolutely robust, and they're really, really fantastic. So what we could see here is, unfortunately, very typical for PPI. I come down to just take out my stop loss here, which I thought I was being a little bit clever with by putting it under this low, but ultimately it's run both of them. And we might see a recovery here. But if we do, we do. At the end of the day, it goes in the journal, and we turn around and we say to our journal, right, this is what we saw. This is the trade setup we took this in the run up to PPI, got the trigger, but then unfortunately we didn't get the kind of high energy move we were looking for. Over the months and years, as you're journaling these things, you will look back on your losing and winning trades and you'll find these patterns. And all of a sudden you might think, God, you know what? I've actually got a much higher loss rate when I trade news days. So you can just step away from the charts entirely. Unfortunately, at the moment, in cryptocurrency, there aren't many days that aren't impactful by news, right? So that's another thing that's made it quite tricky to trade these conditions, which is another reason I really tip my hat to what the team are doing over at TBN to have such a high win rate. But ultimately, this one's been chalked up as a loss. So let's see what the rest of the day plays out. It's now a very dangerous time, in my opinion, to trade between now and FOMC. So, Ali, we'll probably get a pivot soon, but I've seen a chart showing that after pivots historically, we get a few weeks of bullishness, then we dump hard. Interesting. Again, yeah, I think anything like that, once you've really got the data, really understand the data, know how far it goes back and what the validity of it is. So, guys, who wants to take a look at some alts? Who's got anything interesting on their radar? We had a really cool setup yesterday on BNB. And this does go to show how you can find the outliers sometimes, right? You see, I don't know if I've cleaned this chart off or not, or... Here we go. So, look, really kind of similar situation here, right? Let me just zoom out for you a little bit. So here we've got our very simple higher time frame range. Let me pop that on the hourly. So once again, impulse range, right? So what happened here? Price came down, set the low, set the high, engaged with the midline. Yeah. If we were then to switch this to our 4-tier range, then we can see how key these levels have been. Let me just make that black so it stands out a bit more. So ultimately, exactly the same as what I was discussing with ETH. Unfortunately, this one didn't work out, but these ones worked out really nicely. Same here, deviation, get back below, change it to the range lows. That was 3.68R trade. This one here, which came in really nice, was we came up, broke, held above this level, set this order block here, which I will show you. Here we go. Interaction with this. Price gets back above. Now, when it stepped back into the range here, what I was looking for was some expansion with some energy. We got that because we can see the fair value gap in here, this grey box, which was ultimately the entry, right? Price came down, held here, made us think it was going to come down to take our stops, but then ultimately we get that ping and that fast expansion to the upside, right? So the initial target for that was 2.5R. Then we would have been targeting these highs over here, and ultimately the trade just continued to run up. So if you see what I mean, if taking this trade, if I'd been hesitant on the other trade, right, which fine, we got stopped out of this today. But if I got hesitant on this one, then, you miss out on a really, really good trade setup. So we have to take our wins with our losses. Okay, nice. So we got some, let me just write some down here, guys. So FET, STX, near, SNX, yeah. Brilliant. Near. Awesome. And AVAX. Imran Khan, my friend. How are you doing? Let's have a look. PC, blah, blah, blah. One more was AVAX for our friend Chris. All right, cool. So we've got 4 there to get on with. Let's lock those ones in, shall we? And let's take a look. So, what should we start with? Let's take a look at FET, shall we? We'll do a little bit of a top down on FET. Interesting. Don't know why it's not on there. There we go. Rob, I'm long E-Gold. Okay, high time frame. We'd love to hear other perspective. Great stuff. Yeah, very welcome. Okay, we'll slam that one in there as our last one as well, especially as that. So we're going to look at FET, SNX, NEAR, and AVAX. Perfect. Okie doke. Let's start with that then. Okay, so here we are on FET. Let's just run a really quick top down on this to make sure. No, nothing lined up on the chart. So looking for a weekly perspective for those of you who are looking at this on the higher time frames, just take a quick sip of water. Well, we can see since this came to buy a bit. Now, look, if you're looking at this from a spot perspective, guys, then I would definitely find an exchange that has the longest possible history, and they're often like Coinbase or Binance, ones like that, or you can find an index chart as well. But in terms of this on a weekly scale, what I'd be looking for here is a couple of things. This week to close and form this fair value gap here. If not, basically our weekly highs and lows are here and here, right? So if we now drop that onto a daily, we can see actually one thing we have here that's really interesting is we have our daily inside bar pattern. Okay, so that makes the mother bar. This makes our inside bar. Yeah, exactly, Ali. There's lots more history of it on Binance, and there almost certainly will be on Coinbase and that as well. And you can always use you can always use an index chart as well. So remember what I said about ranges, right? The mother bar sets our main range, which is this. In fact, let me move that to here. Hey, all right, Craigie boy, enjoy your work calls, mate. I hope they go well for you. Yeah, so this makes sense to everyone. This is the mother bar. This is the inside bar. This pattern often signifies a slow or a potential change in the market. All right, so that's why it's of interest. Now we're looking at the moment, focusing on our inside bar high and low. We're going to drop this down quite aggressively to a 1 hour chart. So we can see again here, right? So we set the inside bar here and here. So deviation back in, trade to the higher. Yeah. When we come up here, kind of just deviate the higher, we find our way back down here to the midline, which we'll draw in here. There we go. Perfect. So we can see range mid, right? So low to mid, through mid, trade to high. High deviation back down, holds the midline, deviates, gets back above, trade it to the highs. Now, the higher deviation closes back within, we trade it to the midline. If we then got our low time frame breakdown here at the midline, we would then look to trade it to the lows. Ultimately, we've now deviated the high again here, come back within, and now we're retesting this here. So on a lower time frame, again, I don't think I would take this trade setup just purely because of the fact that we're heading into FOMC, right? But that right there, we would come up, we've set the high, we've now shifted market structure. If we came up an energetic move back below this, we'd be looking for some kind of inefficiency in here, like a fair value gap. Yeah. This move purges lower, we'd be looking for some kind of FVG in here, in the move lower. And then this price comes back down to this, we then look to trade it to here. You would then want to see price kind of hold below here and a break of market structure down to the lows. All right, that's how I'd be looking to trade that at the moment. Ultimately, if we hold this base at the moment, then price is probably looking at to take the liquidity above these highs. In the same vein, though, if we do come back above this high, yeah, ideally take out this high as well, come back down to this area here. Then on the break of market structure, we could then look to get involved and go long. All right, that's certainly how I'd be looking at it. But I certainly wouldn't be looking to do this now in between the release of the PPI numbers and rolling into CPI. All right, so that would be my thoughts on FET at the moment. Did you want that on any kind of higher time frame than that, Ali? Or were you looking for these kind of time frames, mate? Because let me move on to what one do we have? SNX. Excuse me. Let's move on to SNX quickly. And then if you do want me to pop back and take a look at that, buddy, then I absolutely will do. On the weekly, all right, mate, let's get the Binance chart up then. So in terms of a more kind of investment-based outlook on this, I suppose, if you're looking on this higher time frame, right? And look at the difference in the data that you get when you go to some of these older ones. Now, You see how we get these rounded bottoms, yeah, before price really looks to take off. Same in here, right? You get it just round, slowly starts to build momentum. Okay, this one kind of ultimately didn't come to fruition, but then we got this, which still didn't take out the lows from here, and price came back out. Now, when we're looking at this, no, Ali, more than fine, mate. Thank you for the heads up. So, what I'd be concerned about here, or not concerned about, but what I'd be aware of is the fact that we've taken liquidity from this high here, yeah, and price has now come back in and we've started to break down. So as we've come down here, we've then set this low. So I think on a weekly scale, seeing price come back above here, yeah, and then again looking to then make an initial attack on this high, I think I'd want to see this level reclaimed here. So strong close above, and then I'd look to move to the lower time frames. And from there, or in this case, you would be either the high hourly. You'd look for kind of a reclaim of market structure. Yeah, so you're looking for price to kind of build this out now as a support base. Once it does that, then ultimately I'd be targeting these highs here that remain untapped, because there'll be people's stop losses up here, right? So that's where price can typically look to search for liquidity. If we want to throw on a little bit of extra confluence here, if we take the bottom of this move higher, if we move this to a traditional fib, the interesting one that we've got here is we've kind of come down, we've lost the golden pocket and also the 705. Doesn't mean that we haven't come in for a slightly deeper correction. Yeah. Which you can see here. So we're currently holding at the 786. But again, for me, I'd like to see the golden pocket reclaimed here. We kind of have confluence with this SR level. And then I think holding of this could then look for price to kind of push a little bit higher. The reverse of that is then if we're looking at this as a drop, we can see that if this is targeting the golden pocket, then we can use that as a level to look at on the lower time frames again when we're targeting that for our swing trades. Okay. Another interesting thing to look at here would be the monthly. Yeah, again, we can see the key sweep of this monthly high. Ultimately, price is getting rejected. We're currently down in this monthly fair value gap. So there's an argument here that moving from that into here, we could say, okay, on the higher time frames, we would want to see this FVG hold. Yeah, we wouldn't want to see it violated. And a reclaim of market structure here, yeah, and a retest of this, I think would be bullish. Maybe even before this level, I think if we got that out of the fair value gap, I think this would be enough for us to say, okay, a break of this line here, yeah, and a reclaim of structure could be enough to push us higher. But ultimately, I think still the safest bet is to wait for this level to be reclaimed. All right, bud. But in terms of positioning, yeah, I think if we look at the quarterly as well, we can see that basically the absolute bottom for price is here. We came into this FVG here, didn't close below it. Price then ultimately got that bullish reaction higher, which is what we'd be looking for from this one over here. So better not close under 18 cents. Yeah, I think if we look at 18 cents here, basically where we are at the moment. I think probably a close below that. Although on a weekly scale, what you'd want to see if we do dip below that is some kind of bullish reaction, right? So if we zoom in, Yakuza Kana, hey bud. No, not at all. We've got a few we're going to try and tick off quickly before we move on. We're going to focus on some high time frame stuff at the moment because I don't really advocate. I'm certainly not looking for any lower time frame trading today. So we would look to whip below this level, then look for a strong reaction to reclaim it. In which case we could then swing fail the prior week's low. Yeah. In which case we could then look to target the prior week's high, still allowing us some room to run up and day trade this into this level here. All right. So if we now look at what are we on? SNX. Take another sip of water, guys. Hot here in the UK today. There we go. So Okay, weekly scale, this is kind of giving us something to work with here. So, silly thing to say, obviously seems really obvious, but that's what's capping the market to the downside, which is the ultimate low that dropped off here. Again, actually, let's do this on Binance. We'll do it on the spot chart. I think it will give us. I think it will just give us a little bit more history, right? And then we can make sure we've got everything that we need. There we go. So let's see where we are here. Yeah, I think ultimately this level here is still the key one to the downside. That's what's kind of capping the downside move there. In terms of what's kind of looking for in terms of upside movement, yeah, okay, we see this fair value gap here, right? So the gap between there and there. If we're looking on here, we've got this OB, so this last up candle before the move lower. We would think that's what's capping the market to the upside at the moment. Yeah, so what happened? Price set this up candle before the move lower. We then got a retest of that. Also, what adds to the validity of the order block here is the fact that we have this gap, yeah, between the first and the third candle, 1, 2, 3. The gap between that wick and that wick, leaving the inefficiency. This wicked up in, yeah, to fill and rebalance that before then ultimately selling off, looking for liquidity lower, which was found below this low, right? Now price recovered. Yeah, price at lower low, lower high, lower low. Right, this was the shift in market structure. Price got rejected here, came back down and found temporary support at this level here. So if we just extract that line across, for me, this has been a key pivot point here on the weekly scale. Yeah, so this high price broke, closed above it, retested it, used this as the base to move higher. Price once again, look, we had this huge purge down into here. This is where the buyers were, right? Price even had a reaction here. Buyers were here, took off, ultimately kind of took a little bit of liquidity here, ran the prior week's high, and then broke down, right? So again, the two plays here on this for me are looking for rejections at this level here, and price to trade lower, where the natural liquidity rests, or for price to show us some strength, break above this, hold this level, and then I think on the break of that, yeah, is when I'd be looking to go long. And you've got some targets here, here, and then ultimately back to the order block that's resting up there, right? Now, remember, this is a weekly chart, yeah? So as we're decanting this down, the daily then kind of becomes our medium time frame, and we'd look for the higher hourly charts in order to execute. But again, what you can see is here, ultimately price just searching for liquidity. Sweep of that high, swing fail, price breaks down. This one here, this comes into this support resistance level. We can see a bit clearer. We had the strong close above, price retested this level and ultimately break out. Again, using our kind of breakout methodology, this being the high. Yeah, remember as we were saying, that being the high that was set. When price closes above that, we can look to enter a limit order on here. So using exactly the same principles we used on the lower time frames. Where's our risk? We know it's just a few pips below this low here. And ultimately we know where we're targeting up here. I think we'd have some kind of awareness for this here as well. But ultimately, on a higher time frame swing trade like this, we'd be looking to target this order block. So with that in mind, that's exactly what I'd be looking for here. Reclaim here, hold, and move up to this level, followed by this, and ultimately the order block. If we face rejection here, and on the lower time frames, maybe looking at this on, say, a 6, 8 hour, and then you're breaking down, maybe even on a 4, then market structure breakdown here, I do think that we're looking to target these lows again. All right. And like I say, guys, whether you're overlaying this on a weekly, a monthly, a daily, a 5 minute chart, a 1 minute chart, the key is to have your triple screen system that you're looking on, your high time frame, where's price reaching for on the high time frame, your weekly, your daily, then your medium time frame, which you're using to find your inefficiencies, your order blocks, etc., and then your execution time frame, where you're looking for your shifts in structure, right, and your energy in the moves. So FET, SNX, what have we got? Near, let's take a very quick look at Near as well. Again, I'm going to do these on the Binance charts, guys, because we're looking at the higher time frame versions, right? So I trade with Bybit, but I day trade, right? So for me, it's slightly different. We go on there. Ali, you're very welcome, mate. Thank you for the very good questions. It's I'm really, really blessed these webinars and that every week you guys allow me to come on, ramble on for an hour about my thoughts on the market that I've learned over the years and really get some good people on here asking some really, really good questions, and also some very humble people that are very respectful, which I'm always very thankful for. So weekly, what are we looking at on Near? So let's take a look here. Basically, the first thing I start doing is when price is down in an area like this, I'm looking for what's kind of holding price here. Yeah. Because if I look to this immediate low, what does this tell me, right? Price came down here. Were there buyers? Yeah, we had a deviation, but ultimately what happened? Price deviated. There were obviously some buyers, but there's also people selling their positions here that were short higher up. Yeah. The chart does look awful, you're right. Not going to lie. I've got some, I'm in full agreement with Ali here. It is a pretty horrible looking chart. And what we can see here again, guys, I would overlay this on any time frame I'm looking at, right? If I was looking to get re-short here, then this is absolutely the place, right? Big inefficiency. Price drives into it here, fails to break market structure. Lower time frame, we would have dropped this down. Price comes up here, mulls around for a little bit, ultimately get the break of the low, and price trades down, searching for liquidity lower down, which I'd be targeting these lows here, which I think we've literally just tagged. So one of the things that's interesting here is we're kind of driving down to some real new lows, right? So now once we get that in play, then we've kind of got a little range here, right? And what I mean by that is we can kind of see the levels for which price needs to reclaim. Now, again, we've got this fair value gap here. This one, this time's on a daily scale. So, if price really is going to be looking to move lower, then I think a rejection of this, retest of this, and I think price could, easily be heading a little bit lower. I would consider trading this long. So if we got a daily close back above here, yeah? So we get our daily close, and on the lower time frame when price comes back into here, I'd be looking for that subtle shift in market structure, right? And then looking to trade it higher, ultimately targeting here, but being on the lower time frames, it allows us to kind of target even the kind of equilibrium of this, which would be this high. And the reason for that, if we're entering there, the equilibrium of that high is still like 5%, 5.3%. That's a massive run on a scalp or a day trade or even a shorter swing trade. Wait for the bull market to look beautiful. Yeah, definitely. Wait for the bull market to look beautiful and for the times to look a lot more prosperous than they are now. At the moment as well, there's a lot of FUD out in the market. We need to remember, the SEC lawsuit against Binance. We've got a lot of fear in the marketplace as well. We've got the crypto that's been, conveniently redefined as securities, meaning that most exchanges are starting to pull them off because of regulatory problems. So the market is a little bit choppy. We've got FOMC coming up later. People were, markets were basically starting to price in the fact that they thought there was going to be a pause or even a cut of rates, which I'm not sure, to be honest, I ever really saw. But these, not to criticize these people, some of the best experts in the world. So certainly seeing things that I'm not. But with my kind of layman eyes on the macro, it certainly didn't seem like a rate cut was going to be in order. But now they're saying with the kind of the inflationary situation and the figures being printed yesterday that actually, inflation is probably not as in check as they thought. So maybe they're now going to have to add another, 25 basis points to the rates. And if that is the case, then that can really spell a little bit of trouble. But back to this, look, we reclaim this level, we start to hold here on the lower time frames. I think we can push up a little bit, at least to the equilibrium of this daily fair value gap. Holding below here, let's just zoom back out again for a minute. Holding below here, then I think that it's this, right? I think it's this weekly order block here. I think that would be my thought process on this. I think that seems like the most realistic place to target. I mean, there's an argument we're in there. No, no. I mean, there's an argument we're in this one, the larger candle here, the huge wicks up and down, but ultimately we still get this down candle before the larger expansion. So I'd be favouring this kind of consolidation. Looking at this on a daily, right, we can see the consolidation in here. Price ultimately tells us it's ready to move with this move higher. Retest this level. See how we don't really get any closes below the equilibrium, the 50% point here. So if we take the high of this order block to the low, and then we just make this our 50%. Yeah, see how these start to wick into it, but we ultimately hold strength. That gives us the conviction then on this breakout to go long. So I think if we really do start to break down further here, then this really becomes the ultimate target a little bit lower down. So what have we got here as well? Let's take a very quick look at AVAX. I'm going to try and wrap these ones up in the next kind of 10 minutes, guys, so I don't keep you all here for too long. So here we go. So back out to our weekly. Just have a sip of water. Right, now this is interesting, okay? So look, we got these relative equal lows here, right? See that on the left side of the chart? That for me is a really enticing point for price. So if we mark those out there, write them out. Okay, so we know that's on our chart now. We know if price comes in anywhere near that. Now, this is the next point of real interest because we swing failed here. Let's draw that out to the same point, but make that one thinner, meaning the price came down, took the liquidity, and then we've had this sort of bullish reaction here. However, obviously we need to see this kind of play out a little bit more in time. The other thing that's of interest here that could suppress price is you see this bullish fair value gap, right? This is what we'd be looking for price to come back down. See how it found support here at the equilibrium? We then look to trade that higher, ultimately to the liquidity resting above here, which we didn't quite tap, or here. On the lower time frame, though, I imagine there'll be a key order block in here that kind of rejected price. However, what we can now see is if we adjust this, right, and let's just for argument's sake say that price from this weekly candle closes here, then what you've got here is something that ICT, who I studied many years ago under his original mentorship, would call like a balanced price range, right? Meaning that once you've got this kind of inverse fair value gap, if this then starts to act, right, as resistance, then you really could be forming quite a strong resistance, right, for price to purge lower. So I'd certainly be watching for that. Yeah, we can see that quite clearly here on a daily scale. I mean, we see how well that kind of held up to that as price moved higher. Now, if we've lost that, and we're looking for price to kind of foray into that, if we then start breaking down from here, then ultimately we're looking for price to purge. I think we'll go below this here to attack that low. All right, and then anything there attacking this, I think then ultimately we really could be looking for price to move a bit lower. The opposite is true, though, if we're going to move higher, right? If we really slice through this and we start to make a base, then that structural break here, yes, higher highs and higher lows, then we've got these nice untapped highs running all the way up here that we can start targeting as 1, 2, and ultimately I think probably this order block here. Now, in terms of looking why price here didn't quite run this high, yeah, obviously crypto's never the cleanest. No, market is ever really infallible, but I would be saying to myself, okay, well, look, we had these order blocks here, right? These consecutive candles before price purged lower. So if we're making an allowance for the bodies of these, yeah, or even if you're allowing for the wicks, right? I know that's a big area, right? But what you're saying is price came down. These were the up candles, right? Before price moved lower. And then what you'd look to do is you look to refine it as you move down through your time frames and find, ultimately what was the really, really key one. Yeah. So I would say actually, and again, you really, really need to do your due diligence and study on order block theory and supply and demand to decide whether you're allowing for adjoining order blocks or whether you're looking for like the key order block, that last one before the move lower. Yeah, but ultimately, when we look at this, we can see price tagged it there, sold off, came back, resistance again, sold off. Where to? Yeah, as we highlighted earlier, price came up and ultimately got rejected there again. So when we're starting to write out our TA, it's really, really important we leave these levels on there because when we interact with those, it gives us our kind of high confidence setups. But for now, with AVAX, I think we need to reclaim this on the kind of higher time frames to look for continuation, not continuation, but to look to break trend and move higher. I would be very, very cautious of all of these untapped highs. Yeah, these are the kind of things that we'd be looking at for our targets as we moved up. Ultimately, if we break down here and we reject here, then we know where our targets are. This naked low here, and then ultimately our key kind of low here, which we got all the way back here, which are these equal lows, which is definitely somewhere I'd be interested in. If we run that, I would really love to see that catalyze a reversal. So what was the last one we said we would take a quick look at? Was E-Gold for our friend Chris, wasn't it? EGLD USD. No, USD is fine. Put this on the weekly chart. Okie doke, right. So let's have a look where we are here. Now, what's the significance of this? So July 2019. Now, that was obviously capping the market there for quite a while. So for me, that becomes of interest, meaning that ultimate high when price took off, came down, consolidated, broke, couldn't get back above it. Yeah, just see these long wicks. Then ultimately, when it did, strong close above, retest, price moved away. So that's a really key kind of area of interest there for me. Something clearly capped the market to the downside here. All right, so once again, when we're looking at that, what happened here, very, very similar actually to what we were looking at with AVAX, right? Price came down, deviated, got back above, came into this fair value gap. This fair value gap rejected price. Here, see, we didn't get any closes above it. Price broke down, retested it, and sold off. Now, Chris, you're very welcome, mate. Anytime, bud. Anytime. Sorry, I can't get to more. Yeah, whack. No problem, mate. Sorry, I know this one's rattled on a little bit. I will tie this one up after this one, guys, in case anyone wants to record this and not have to set aside half their day. Great to see you as always, mate. So that's where we are at the moment. What would I be looking at here? Now, there's a chance that this is a swing fail of this. So now as we move to the daily, yeah, I mean, there's a little bit of a confluence here if we wanted to move to a lower time frame, right? Because we've got this fair value gap here. Now, price can either come into here, reject. So if we come up into this, ultimately get back below it, we'd look for a retest, and then that would be our target one, would be that untapped low. No, that looks horrendous. Across it, so it doesn't look like it's been drawn by an absolute muppet. There we go. So price to purge above, ultimately take some liquidity above here, come back down, retest this level. Target one would be here, so we'd look for that interaction then to trade it down lower. The opposite, I think, would be true if we have a strong move above here. The equilibrium of the FVG holds, again, lower time frame, looking for that shift in market structure, trading up to here where our key level is. We're very aware we've got these untapped highs here as we're going across. So once again, once we take that out, as long as we hold this area, flip this from resistance to support, then I think that we're going to move a little bit higher. All right, guys. Look, I'm sorry. I know that rattled on a little bit today. I wanted to give you some kind of high time frame theory. Really, really interesting of Ali to kind of bring that to the fore today, and something different that we normally do on the streams. Like I say, full disclosure, I got stopped out on my ETH trade earlier. Just take a look at that again. And again, we kind of saw that typically with the news releases, you can get price taken out on both sides of the market. Now heading into FOMC, so I'm not looking to take any active positions. I was trying to get a little bit of a cheeky trade in earlier to run it through pre PPI. And we got the break, we got the trigger, but we just didn't get the follow through, unfortunately, meaning that we got stopped out, but no problem. Like I say, one of the things that I'm particularly proud of with what we do at the Bird Nest is transparency, right? So there's no point me just showing everybody winning trades because, 50%, sometimes more, sometimes a little bit less of your trades are going to be losers. But the whole point is we know by our risk over time that by targeting the right risk to reward and having systems that are robust, that are tested over time, that we can use that to our advantage. So with that, guy, Imran Khan, thank you very much. Yeah, do smash the like, guys, if you enjoyed it. I hope you enjoyed this slightly longer session. And do get in touch with me, right? Look, there's details down in the description how you can join the Nest for free. You can come on board for the trial. You can take advantage of any of our offers and getting our calls. But yeah, do please get in touch with me. You can reach out to me on Twitter as well, guys. All right. Come and ask me some questions. If you've got any ideas that you'd like to see on these sessions, please do let me know. We're looking to kind of bring some live trading, maybe real low time frame scalping sessions to you guys as well. But I know some of you really like the education, other of you really want to see charts. So I really want to make sure that this time is kind of geared towards you guys, because this all goes into the public domain for free, right? I'm active every day on the Nest, so if you want more activity like that with myself and other professional traders, please do check out the details below. And you can also find me as well on Twitter. Just let me pop this in here, BC_Whitfield. All right. In fact, ignore those completely because I have I don't want to ban myself, but I have made a spelling mistake there. _RICHFIELD. So ignore the first one, guys. Second one, if you've got any interest, do pop along. Ignore that one. That's the one that you want on screen right now. Come along, ask me some questions, give some examples of what we could or what I could do for the live shows more. And yeah, apart from that, guys, just wishing you all a great week. I think next week we're back to normal. No conferences or anything. So I'm going to be there on Monday, which is going to be our Bitcoin focus. We're going to look at how I'm setting up for the week ahead. And then beyond that, we're going to have our chart request Wednesday when we're going to look at alts and bits and pieces as well. Yakuza Kana, sorry, mate. I just saw your one about CSPR. You know what? If you've got a couple of minutes, mate, you're always on these streams. Let me just have a very quick look for you. It will literally take us 2 minutes, yeah? For anybody that wants to hang around. If not, guys, love you all. Really appreciate you stopping by on this as well. And absolute blessings to you all for the week ahead. So what was it? CSPR USD. Is that the one? CSPR. Here we go. CSPR. Okay. Casper, CSPR USD. Have a little look on KuCoin. I think you enjoy your KuCoin ones, don't you? Yakuza. I know somebody on here is always picking me some real gems on those. So really super quick, guys. What's the weekly chart showing us? Weekly chart looks okay. What do I mean by that? Low, high, higher, low, higher, high. What would I be looking to hold here? Ultimately, this order block here would be of great interest to hold. Should we come down a little bit lower, we'd want to see a bullish reaction in there. Yep, certainly key for me on that for sure. I think that order block's going to be massive. And then when we zoom out, this is what you want to see, right? When you're picking a higher time frame order block, this consolidation here, you ideally want to see price blow above, come down, retest this, and then really look to pick higher, right? Okay, so you've got that retest, you've got that move higher. So actually, in terms of any kind of, looking to be a spot buyer here or looking for anything, I'd be looking to drop this down onto the lower time frames in here, looking for price to come into here. Yeah, I think we start reclaiming some market structure here. I think we can make some pretty aggressive moves. I'd say probably first of all to that untapped higher. We've got one just slightly above it here. I'm not saying it's going to obviously do this, guys, but that would be the kind of path that I'd be looking for this to take. This here, that's pretty quick. Price could kind of reclaim that quite fast. Ultimately, however, on the flip side, is if we lose that, and looking on a scale, I'm saying to myself, okay, where were the buyers before? Probably in here. I know this is a really broad area, right? But we're mainly interested in the top side of it here. What do we get here? No, it probably is actually just this one here. Really small body down candle before we had that expensive move higher. Yeah, so see this? See, we break above, we come down and retest it. Yeah, and then price takes off above 0.03530, 0.035. Oh, okay. Yeah, nice. I can understand why. Coming down into this, this down candle here, this daily kind of smaller daily order block here before price moves up. So let's just tag our weekly off for a second and refine this down to a daily. We can see we've got this little down candle here before the move higher. I can absolutely see that kind of lines up with our theory from the weekly as well. Yeah, I think I'd be looking for reactions round about there, mate, and seeing if we can kind of reclaim that and push a little bit higher up. Look, sorry, that was really, really super quick. I hope that's been useful. Actually, until we get down there, we're kind of just in a little bit of no man's land here. Apart from the fact that what you can always make an allowance for, guys, is always look left and say to yourself, okay, where was the down move before price expanded higher? Yeah. So when you see that here and you see we've got this cluster of candles, now, again, do your research on this, guys, or certainly ask questions. I like to take the bodies when it comes to adjoining candles. Otherwise, the wicks can really show us too much. The bodies are where the volume is. So where we are here in this, I think a reclaim of this here, and then a break of market structure, I think I'd be looking for kind of short-term moves up into this kind of order block area here. Yeah, so price comes along, sets this high. We want to see a break of this high, price hold here, push up. We've then ultimately got that high that we target here, but also the order blocks in here, which we'd look to refine on the lower time frames. All right, guys, look, thanks for that, guys. Really appreciate you all. Have a fantastic weekend. I'm really, really sorry if I missed anybody's requests. Do throw them in the chat next Wednesday or Monday. If we've got time at the end of Monday's show, we'll look to have a look. And remember, on Monday, if there's anything education focused you guys want to cover, reach out to me either through the Nest or on Twitter, and we'll absolutely get that done. Have a fantastic week ahead, guys. Remember, we've got a very news-driven week, okay? So please make yourself aware of that and watch out for FOMC later today. Take care.